Hello, this is Connie Belden, and in this video, we're going to go on with decision making and talk about two other types of decisions a business may have to make. The first one we're going to talk about is make or buy, and the second one we're going to talk about is special order. Let's start with make buy. Let's assume that we make bicycles and we're trying to decide if we want to make the seats that we put on our bicycles, or if we want to buy those seats from an outside supplier that would cost us $40 each. We do need 15,000 bike seats a year. So let's analyze it out. If we decide to buy the bike seats from an outside supplier, that would be 15,000 bike seats at $40 each for a total cost for the year of $600,000. Now we need to analyze which costs are relevant in the decision making for the cost of making the bike seat. Any variable costs are considered relevant. So direct materials, direct labor, and variable overhead are all considered relevant. So I'll bring down those amounts. For direct materials, I'll bring down the $225,000. For direct labor, I'll bring down the $165,000. And for variable overhead, I will bring down the $30,000. Now we need to analyze the fixed. The fixed overhead traceable, $135,000, means that is directly traceable to the seats, but we need to determine how much of it is relevant. Notice there's an asterisk, and here it says 1/3 of it is supervisor salary. That is relevant because we could eliminate the supervisor of the bike seats if we eliminate the seats. So 1/3 is relevant. However, the other 2/3 is depreciation. Depreciation is never a relevant cost. It's a non-cash expense. It's a sunk cost and not considered in decision making. So therefore, the relevant part is 1/3 of $135,000, which I wrote here below, and that equals $45,000. So if I add that up, the relevant cost of making the bike seat is $465,000. I'll bring down the $600,000 to buy it. If you go left to right, take 465 minus 600, you get a difference, a negative $135,000, meaning that it would cost you $135,000 more to buy the bike seat than to make it. So if you're relying on financial data, you should go ahead and make the bike seat, as you would save $135,000. Now, I want to point out, sometimes you will consider non-financial data, such as if we did decide to buy the bike seat. Will the quality of that bike seat be as good as the bike seat I would make? Can I depend on them? Are they reliable? Will they get us the bike seat shipped to us in time for us to use them and put them on our bikes? So all things that we might want to consider. Okay, next, let's look at a what-if scenario. What if instead of making the bike seats, you bought the bike seats and you bought them at that $600,000 cost? So I'm going to bring that down to the buy column. And then you use that free capacity to make seat cushions. And if you made the seat cushions, you can make an extra segment margin of $150,000. So therefore, if you make the bike seats, remember above, we came up with it would cost us $465,000. And in this case, if we continue to make the bike seats, we would lose out on the opportunity cost to make those seat cushions and make additional $150,000 in segment margin. So therefore, I will add that in to the make column. So therefore, because we would lose out on that extra $150,000 segment margin, it really cost us $615,000 if I add those together to make the bike seat, as opposed to $600,000 to buy it. So if I go left to right, I get a positive $15,000. And in this case, it would actually be more financially beneficial to buy the bike seat and use the capacity to make the seat cushions. Okay, moving on. Next, we're going to take a look at special order decisions. Let's say that we make some gold rings and we sell them for $402 each. The cost per ring is given to you there. A local merchant has approached us. They want to buy 23 rings, so a large quantity of them. But because they're buying a large quantity, they want to buy them at $362 each, a discounted price. Now, if we do accept that special order, there would be an additional variable cost of $9 per ring for an additional filler, and then a one-time fixed cost of $451 to buy an engravement tool. Now, it did note on the manufacturing overhead that only $10 of it is variable. Okay, so let's analyze the situation. Per unit, it would bring in an extra $362 per ring. If I take that times 23 rings, that would bring in $8,326 in additional revenues. For additional costs, we would have to consider all of our variable costs. So we would start with direct materials. Per ring, that's $148,000. When I take it times 23 rings, that's $3,404. Direct labor is given at $89 per ring. If I take that times 23 rings, that's $2,047. Now, manufacturing overhead is given at $36, but the only relevant part is the $10 variable. So 10, and then 10 times 23 is 230. Now, remember here, we have to have that special filler at $9 per ring, and then 9 times 23 is 207. If I add these four variable costs together, I get $5,888 in total variable cost. Now remember, there will be an additional fixed cost of $451, a one-time flat amount, for the engraving tool. So if I add the $5,888 for variable cost plus the $451 for additional fixed cost, my total incremental cost for these additional 23 rings is $6,339. If I take my additional revenues of $83.26 minus my incremental cost of $63.39, I will have a financial advantage of accepting this order of $1,987. So I should go ahead and accept the order.